we've got farmers noticing that wildfire smoke is back, lingering overhead in a lot of places.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. So glad you could join us. Thanks for being a part of our day and allowing us to be a part of yours. We always look forward to visiting with you about all things ag-related. Make sure you like these videos. Click on that little bell icon to subscribe. That way we can let you know every time we post a new one. And share these videos with others. Thanks to your help, we continue to be one of the fastest growing ag podcasts out there. And we thank you so much. My guest today happens to be Joe Camp of Comstock Investments. We're going to analyze Wednesday's market action. And, well, Joe, a lot of folks call this hump day. It looks like, if anything, maybe soybeans kind of went over a hump a little bit. It looks like they gave back part of what they gained here recently. What's the story there?
That's right. It would have been a much firmer close, broadly speaking, for the grains following a mostly stronger start to the week. We had wheat up and down, but for corn futures, 3 days in a row to hold at least small gains, which is, of course, a difference from what we had been in for so long, this downward spiral. And finally, a Monday where there was some of that early upside relief for the market, soybeans as well, but fleeting, and especially so for soybeans. Corn also, though, coming off of session highs, holding up relatively better and above the $4 mark. But for soybeans in particular, it felt like they were the first to run in to some chart pushback. So I did queue up the November soybean futures chart to show, and just wanted to point out pretty simply how we were rejected again at this 20-day moving average, the blue line that splits those Bollinger Bands that we bring up now and then for a look at volatility. You've had this before, right? Actually, at the beginning of the month at much higher levels, trying to bounce out of this downtrend, and yet being rejected up at that 20-day moving average. So just generally not showing the real bullish follow-through momentum after that big leap up to start the week. It's a somewhat similar chart look for corn, although a little bit better here on September futures because they're above that 20-day moving average the first time in a while, and potentially doing those first stages of a basing to get towards higher levels. This is actually the continuous chart. At the very right, you're going to have the nearby September futures, but beyond that, the previous months like July, May, March before that, you have what's notable on this continuous chart, this closure of the expiration gap, and that came into play, and like soybeans, ultimately no real follow through on the early upstart.
What do we do with all this information now? Has anything really changed in the last 72 hours to affect the grain at all?
Coming into this week, there was talk about the weather forecast drying out, warming up considerably. But then all of a sudden you come into hump day, Wednesday, today, and it's raining in parts of where I'm at, central Illinois. I know it's cloudy in Chicago, and the speculators are trying to keep their attention on this talk of really rather favorable conditions that have developed generally over this past month. To say that still has to recognize some of the damage already done and what could be ahead, say, in future crop reports, but that's not potentially until August 12th, the next monthly update. Before then, it is all about this weather that shifts so quickly, whereas you had some of that risk premium want to be re-entering the mix here early on. It was a bit of a fizzling of that weather storyline today, it felt like.
The corn that is furthest behind, like in northwest Iowa and southern Minnesota, in that area, how far along is that corn right now?
You're seeing in some spots where it's, taller than I am, taller than 6 foot, certainly tasseled by now, but yet across the road or a couple of miles away, you're talking about just barely above waist-high corn that would look like it's 5 weeks late. And go figure, we know that was going to be the stage of it, where you had that early April, then pause, and then a lot of late May and into June plantings that were late and could be potentially docked with yield penalties late if we don't have that finishing weather. And that was another kind of reminder for the forecast as it developed and doubled down again on temperatures heating up increasingly into next month and early in September, that there is going to be a window for a portion of this crop at least that is really susceptible to temperatures not, or to conditions in general not holding out that late.
Yeah, if it's cooler like it has been, I mean, it makes it really hard to rack up those growing degree units, and it makes it hard for that crop to catch up in maturity. So it's just something to think about in the back of your mind out there. What about the short position that's been held by the commodity funds? Anything changing there?
That went along with the weather spark at the beginning of the week to come into play, where we have to be talking about short covering, profit taking in general. And that can be the case, especially when you're following these past couple of weeks where we've built up again those hedge funds into record net short positions on corn and soybeans, not that far across all of the wheat. And so short covering bounces can produce considerable upside when you have that hefty of a bearish bet and just part of that wanting to exit the market and book those profits. And like I say, not to be the last one to do it. At the same time, though, we watch these open interest levels and they're not coming down as much as you might expect on just simply short covering. So it is a critical point, and there's some vying between the outstanding bears and some fresh interest in wanting to maybe buy the weather risk or buy the demand optimism, buy commodities as a whole with inflation, or you name it. There has been some of that new interest, signs of that at points this week.
So, any hope on exports?
Exports are an interesting subject right now because of what we just kind of talked about with these lower prices triggering some additional interest and maybe being the silver lining all of a sudden. You can see that starting last week in a big way with soybean exports, and all of a sudden the big 500,000 metric ton sale to an unknown buyer, likely China, for the new crop after we'd been so worried about how they were really kicking off the new season. And it's still a big issue. I want to bring up a soybean export chart just to show where soybean sales are at this year, heading into now the last month of the marketing year, compared to a year ago in blue, the 5-year average in green, down sharply. Down, this year to China alone, beans off 25%. I bring that up because of how vulnerable I think the beans still are to lost business to China. We've got to keep that in mind as we talk about the election, about the Chinese economy slowing down, about all of these things, the dollar and its impact on exports. We're very much vulnerable, or relatively more so on the exports, because of how China still accounts for more than half of our total soybean exports. It's much lower than that on the corn, which is why that's a probably more bullish storyline right now, the corn exports being up about 25% from a year ago, and having other business, primarily from Japan, Colombia, Mexico in the lead, that's more than offsetting that business being down with China.
Well, they used to say when you got wheat harvest past the 70% progress line, that would indicate a low in the market from harvest pressure. Doesn't seem to have been happening just yet. What's it going to take to pull this wheat market up?
That's right. And there was some conjecture, by myself included, that we could get past the peak of the winter harvest pressure sooner than normal because of how fast it really kicked off and how quickly it got past that halfway mark. But I think what we have to bring into play here is that we're not just talking about the winter wheat harvest, and there's more and more focus on the spring wheat crop, which seems to have just very solid potential. We know you've covered it, and your guests have been out there showing us what kind of potential we've got in places. We have the USDA crop report. That was one of the big bearish surprises for wheat overall, was how the spring wheat yield jumped on this last report. And so that's probably the lingering harvest / seasonal negativity that we've got going on is this transition from the winter wheat into the spring.
And the spring wheat tour is going on this week, and it did seem to indicate just pretty exceptional yields out there.
Absolutely. So that being the case does take a bite out of it. We can see it in basis values. That seasonal pressure is absolutely still out there for now.
Now, what about further north? I know in the past we had talked about the oat market, maybe even the canola market. And of course, now you're talking some of the Canadian prairie provinces and what's going on up there. But what's the latest on their production this year?
Well, add to it this conversation about how cloudy it is today. Even if not for that, we've got farmers noticing that wildfire smoke is back, lingering overhead in a lot of places. So it's a topical um, issue for us right now, as well as it is for what we're seeing in those prairie regions of Canada that are so important for, say, oats production, as mentioned, which has recently bounced some 25 cents for futures in just the last week or so. Today, taking a breather on that. Again, we're going to hang on the forecast here, where there's still some time. Could catch some rains in places and save what is right now a crop that's getting smaller by the day.
Well, let's look at livestock and live cattle. They seem to be up there in the stratosphere yet. They haven't broken yet. Feeder cattle, they seem to be kind of treading water. What's going on with that?
That would be about the way I'd start, is to describe the difference between live cattle and feeder cattle right now. And we can just go to the charts, like that we talked about for corn and soybeans. We don't have to show them to depict what you just said, which is live cattle are right up there, top end of the range. They've been trending higher since April. You've got now just right under the year's highs, some small resistance before you'd ultimately go on to test last year's all-time record highs from September, and still having to respect what is a strong, certainly resilient cash market. You should say the same thing about feeders, that cash market hasn't showed any real signs of slowing down. But at the moment, maybe some respect to the corn futures having some strength all of a sudden as of late, some just slowing down of the aggressive fund buying that we'd observed a couple of weeks ago across the complex. And ultimately now, waiting on something fresh in terms of data as we get past this sort of peak summer season.
Am I off target if I look at a feeder cattle chart right now? And to me, at first glance, it looks like it's coiling up, like it's kind of a contracting wedge pattern there as the ranges seem to be getting smaller and smaller as we go. Do you look at it that way, or am I looking at the wrong thing?
Yeah, no, that's a reminder of what I had thought about that chart, looking at it relative to the live cattle that are up at the top end of the range. Feeder cattle are at the bottom of this big, as I think you're alluding to it, this narrowing formation that ultimately is going to proceed probably a breakout or a breakdown. Again, because now we're at the bottom, testing the bottom ends of the recent trading range. It's been more negative. It's confounding, though, because of the relative strength for live cattle, and just sets us up for something big to come. Certainly, I think overall, still a lot of bullish underpinnings for the fundamentals of it.
So is there finally hope now in the hog market? I mean, the last week or so, it looks pretty positive, doesn't it?
Yeah, we have to bring up that adage that we've talked about before, of low prices being the cure for low prices, and the competitiveness of pork at the grocery store, I think, has been proven out. You've seen some weakness, but then overall resiliency for pork cutout prices, cash prices showing some seasonal rebound here. Still some tightening expected overall for production heading into the end of the calendar year. And all of that, takes the edge off of the speculative bearishness. And there has been, like the grains, some general short covering on what had been a built up net short position by the funds on hogs.
All right. So in general, when you look at the ag complex, what are you going to be alert for any kind of a trigger event to move either the grain or the livestock? What's going to be top of your list?
Probably these big geopolitical headlines, the global security risks that are ongoing. Certainly, those, as we've come to see, can relate to the U.S. elections and all that's heating up there. It just feels like it's a market that is very sensitive to what's going on outside of the normal conversations of supply and demand for these individual commodities, and we can very much have those things take over where the dollar's moving hard one way or another to help or hurt commodities, or crude oil takes off because of whatever popping off in the Middle East, or the stock market, like it was showing signs of today, really taking a rather steep correction and showing some nervousness about the economy. These are all things that we, of course, got to keep track of while we're trying to monitor those usuals of what the forecast looks like and what it means for crop production potential.
And another possible black swan event out there, I did a show on this yesterday, and that was the potential down the road in a couple of months. We could be looking at a port strike. Like, we need that. That that wouldn't be great either when it comes to American producers. We need all the exports we can get, and that wouldn't help at all.
Always something for logistics, it feels like lately.
All right. Well, Joe, thank you for taking time to talk with us and analyzing Wednesday's trade. Appreciate that very much. That's Joe Camp of Comstock Investments. And there you have it. That'll do it for this episode. Thanks again for joining us. For producer Brianne Hendrickson, I'm Marlin Bohling, and we'll catch you next time here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.